Hello, everyone, and welcome to today's webinar, U.S. and Romanian Tax Considerations for Cross-Border Investments and the Mobile Workforce. Before we get started, I would like to go over a few items so you know how to participate in today's event. You have joined the presentation listening using your computer speaker system by default. If you would prefer to join over the telephone, just select phone call in the audio pane and the dial-in information will be displayed. All attendees are in listen-only mode. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time during the presentation, and we will collect these and address them during our Q&A portion at the end of the presentation. Today's webinar is being recorded. A copy of the audio recording will be emailed to you within 24 hours of the completion of this live presentation. I would now pass the presentation over to Dorian. Go ahead.
Good morning to everyone and bună ziua tuturor. My name is Dorin Munteanu, President of Romanian-American Chamber of Commerce in Washington, D.C. And on behalf of our organization, I want to warmly welcome all participants to our webinar. Today, we continue to celebrate the 10th anniversary of the U.S.-Romania Strategic Partnership and of Atlanticism. But some of you might ask, celebrating taxes? Does that sound right? We believe it does, and in the next 90 minutes, you'll hear why. This event was made possible due to two key things. Our friends' efforts from both sides of the Atlantic. Răzvan Miuțescu and his Whiteford, Taylor, and Preston colleagues, Crow LLP, Mazars Romania, Stoica and Asociații. And secondly, due to you, the audience. So we are very grateful to you all for joining us. Our mission at the RACC is to raise the bar in the US and Romania business community through the exchange of ideas, development of trusted relationships, and the facilitation of business innovation. With multiple active chapters throughout the United States and Romania, Romanian-American Chamber of Commerce is your strategic resource and friend. Please connect with us directly or via our digital communication channels. We would love to meet you. So are you ready for having fun with taxes? Everyone has their note-taking pads? Because we'll hear some really great insights from top experts. This being said, we thank you again, and now I will turn it to my colleague and moderator, Andrei Enache.
Thank you, Doreen, and again, welcome everyone. I'm excited to introduce our incredible panelists today. On the Romanian side, we have Lucian Dumitru, who is a tax director at Mazars Romania. We also have Constantin Pintilia, who is a senior associate at Stoica and Asociați. And on the US side, we have Elizabeth Atkinson, who is a partner at Whiteford, Taylor, and Preston, and Mario De Castro, who is a managing director at Crow. So let's get right into it. We will start with the Romanian panelists, Lucian and Constantin. And for you, Lucian, I would like to ask, what would be an optimum action plan for a potential investor to tackle the tax aspects of a Romanian investment?
Yeah, so thank you, Andrei. Thank you, all the participants. And I think this is mainly an unusual question that I have been getting for so many years. In terms of Romanian taxation, things have evolved throughout at least the last 10-12 years from the perspective of a tax practitioner. I would say that this is a positive evolution. And when looking at our experience with US investors that are looking to come to Romania, there are a couple of points that should be followed in order, I think, to have a proper understanding of what they are getting into, and maximizing the chances of success for their investment here. So I think first one needs to understand the general tax framework in Romania for both businesses and also individuals. Because, for example, we thought about discussing two hypothetical situations. You can have a corporate investor, so a US company that is looking, for example, to open a software development center in Romania. And for this purpose, it may need to send potentially some of its US employees to Romania to set up the business, to start recruiting, and do this initial legwork here. Yeah. A second situation, you may have a private individual. I've seen quite a lot of US citizens in the last couple of years that have looked at relocating to Romania, from where they either started a business or they registered as self-employed individuals and started performing consulting services. So if we look at these specific cases, the first step in either if you are a company or an individual that is looking to Romania to as an investment or as a relocation country. First, what is the general tax framework? Romania, I think, is not at all that complex when you compare it to the US tax system. From a corporate tax perspective, we have a simple corporate income tax system, which provides for a flat 16% tax rate on profits. This is among the lowest in Europe. Also, if you look at personal taxation, an individual would be subject to a flat income tax rate of 10% for most type of revenues, either if it's revenue from employment or revenue from self-employed activities. This is a simple system looking at this flat tax rate. Yeah. A second point, depending on what type of business you'd like to do in Romania, having understood, okay, this is the general level of taxation here. It is a matter of understanding, okay, what do I want to do in Romania, and whether I want to structure my investment here that in such a way that it may also provide some tax incentives or a specific tax beneficial system. Because Romania has for about 6 or 7 years a special tax system besides the corporate tax that I mentioned earlier, which is aimed at small entrepreneurial businesses, and this means a taxation system that is based on revenue. So if you would have a subsidiary here in Romania, let's say that we have this development center incorporated in Romania, and in the beginning, if it will be, let's say, exploratory, one would look to apply a micro enterprise tax. So it would look at a 1% tax rate on revenues. From this perspective, being a small entrepreneur, this is a better system as compared to the 16% tax on profit. So if you know what you want to do, okay, you may go either right or left and apply one of these specific tax systems. For the second point, one needs to understand how the social security system works in Romania, because even though we have a rather low income tax rate of 10%, the social security the social securities contributions in Romania are rather high, especially for employees, because they are at approximately 35% in total, which is also in our perspective, and also compared to other countries, quite high. So in this respect, one must understand how the social security contributions fits into the overall investment budget, into the overall recruitment strategy. Yeah, a special case that is for which the social security contributions is very relevant is that if we look at the first example, saying, okay, I am going to set up a development center in Romania, and for the first period, I'm going to send a US employee to Romania to do the legwork. In such a case, social securities are of extreme importance, because Romania and the US do not currently have a bilateral social security agreement. And unfortunately, what this means is that most often than not, in such a situation, the respective US employee coming to Romania would be subject to double social security contributions, because Romania would not exempt him or her from the mandatory social security contributions here for the period in which it will exercise those activities under the control of its US employer. The second step, okay, you understand how to apply, what are the general tax rates that are applicable, how the employment and individual taxation fit into the overall investment budget. Second one would look, okay, can I obtain some special tax incentives in Romania for the investment that I am going to perform there? And in this respect, you need to know that Romania has some specific systems that are aimed to a couple of sectors. And I'm looking here for research and development activities, the software development sector, and also the construction sector. So if you are an investor, or if you are a business that operates in these sectors, Romania can represent an attractive market, because you can benefit from specific tax incentives which range from supra deductions of expenses, meaning in the end less taxes here, or even extended tax holidays for both employees and corporate profits. For example, one of the specific points for research and development activities is 10%, is a 10-year full tax holiday. What this means is that basically a company would not pay profit tax in Romania. I think and another point that one needs to understand is the fact that having a business in Romania with this ever-evolving tax environment, one needs to take into consideration that Romania has also transfer pricing rules which are applicable for related party transactions. So why is this relevant? Because what we see in practice is that you can have transactions between the US mother company and the Romanian subsidiary. If we look, for example, at the software development center, the Romanian center would perform services at the benefit of its US mother, and it would need to receive a fee for this. So such a cross-border transaction is subject to transfer pricing, and this is especially relevant nowadays because for Romania, transfer pricing is a real hot potato. Yeah. I think, and also in the end, going through all these steps in respect of taxes, one should also be aware of a non-tax aspect, and this is related to the immigration requirements. This is especially relevant at the start of an investment, when usually foreign businesses would need to second foreign employees to Romania to start the business. In this respect, it is important to know ahead of time what you want to do, having established the business plan, in order to properly plan the obtaining all the immigration requirements and visas for a US citizen coming to Romania to perform work, because in our perspective and from our experience, this is quite a lengthy process, which sometimes can influence the opportunity of an investment here. Yeah, because it can take about 3 to 6 months. So sometimes it can actually delay significantly the ability to start operations in Romania.
Thank you, Lucian. That was great. I guess, so what are the advantages that you consider relevant for Romania from a tax perspective as compared with other countries in the region?
So besides the rather low both corporate income tax and personal income tax rates, I think the tax administration in general is rather simple, especially if I look, for example, at other countries like, from my experience with Poland or even Hungary. Okay. At the same time, my experience with US investors, especially in the technology and software development field, is that these specific tax incentives that I have briefly mentioned have represented an important or a magnet and an important element in their decision making, because it can bring a significant reduction in overall taxation costs. Yeah, so I think these are the main things. Yeah, while at the same time, because Romania is still in the process of developing further its tax rules, the application of the current tax rules can be more or less straightforward, and from an administrative perspective, I think that the burden of operating a business from a tax perspective in Romania is quite efficient.
Okay, great. Now, Cosmin, I would like to move on to you to discuss some of the litigation and legal side of things. What are the main challenges a U.S. investor faces in Romania from the perspective of a lawyer involved in tax litigations?
Thank you, Andrei, for this challenging question. I can say I will try in the following minutes to present some explanations from two perspectives. On the one side, from a general overview of the tax legal framework, and on the other side, I will try to tackle some challenges regarding tax inspection and the subsequent dispute with Romanian tax authorities. So, first of all, one should know that Romania is integrated in European Union legal system. Therefore, an investment of an US citizen or a US legal entity in Romania may be subject to the application of both Romanian and European law. And an advantage for an US investor is that there are at least two relevant treaties concluded between the United States and Romania. The first treaty is a BIT, Bilateral Investment Treaty from 1992, which aimed to provide protection for a foreign investor. The second convention is the Treaty for the Avoidance of Double Taxation, the so-called Double Tax Treaty. Even though it has been in force since 1974 without any amendment, the treaty contains detailed the rules on how the two states will tax statutory and legal persons under their jurisdiction. I observed that in principle, the Romanian tax legislation and the provisions of the double tax treaty are aligned. So the risk of double taxation is diminished, but not totally eliminated. What will be a good point regarding the double tax treaty is that both outgoing and ingoing transactions, for both outgoing and ingoing transactions, the mutual agreement procedure could be triggered in case of double taxation. So taxpayer, which might be subject to double transaction, might trigger this procedure of the mutual agreement based on the double tax treaty. Passing now to the national legislation, I remember that a couple of years ago I participated in the discussion with the CFO of a multinational company. Until then, he had worked in 7 jurisdictions and had an interesting remark at that moment. He said to the audience that he worked with many teams of lawyers in Romania, and very, very rarely he received a clear, a definite answer from them. In fact, I think that what he was trying to underline behind his words was the legal unpredictability perceived in the Romanian business environment. Therefore, and I think an important challenge for both foreign investors and local businesses is that the Romanian tax legislation might be sometimes, may not be sometimes friendly with a long-term business plan due to the many changes that appear shortly. Well, it is well known that a cross-border investment or a transaction is not made overnight, but requires several stages that may take a longer period. So maybe this idea sounds a little bit theoretical, but I can assure you that it has extremely important practical consequences. For example, not a very long time ago, a company requested our advice in a case that highlights how undesirable are the unforeseeable changes of the tax legislation. So, after negotiating a cross-border sale of receivables for 7 months, and the contract was finally concluded, the seller realized that just 2 weeks before the conclusion of the XPA, a seemingly very minor change in tax legislation has been made. No one noticed the change at that time, but when they had to do tax reporting, they realized the real impact. So at the beginning, the seller expected to deduce 100% of the amount of the receivables, but at the end of the transaction, only 30% were still deductible. Another example is based on a very heated public debate that is taking place this day in Romania. In brief, by an amendment of the tax code that entered in force in November 2020, the amounts paid by employers for the early education of the employees' children are deductible from the corporate income tax and also from the personal income tax and social security contribution, up to $350 per month and per child. So many companies at the end of the last year have already announced their employees that they can benefit from such a facility and the companies were waiting for the government to issue the technical rules for the implementation of this measure. But last week, contrary to the expectations of all, the Ministry of Finance decided to propose a postponement of this facility for the next tax year. But what I want to underline by these examples is that an investment in Romania should be tailored in such a way to be resilient to the changes of the tax legislation. Of course, handling this type of unpredictability of the tax legislation is quite difficult for the companies because the decision is above their power. However, I think a close contact between the investors on the one side and both the lawyer and the tax consultant on the other side may help the company to mitigate the risk. For example, in complex projects as cross-border transactions or foreign investments, we always recommend to our client to perform a legal and tax-orientated analysis on due time and to keep a close contact with the lawyers and the tax consultant during the entire process of a transaction, not only to talk with the tax consultant at the beginning of the transaction or at the end, but rather to keep a very close contact with lawyers and tax consultants. So, going further, I want to underline that there are some signs that the stability of the tax legislation here in Romania could be improved. For example, in December 2020, the Constitutional Court ruled for the first time in its history that the principle of legislative predictability in tax matters relates to the constitutional principle of legal certainty. In brief, the Romanian Parliament passed a law introducing a new tax, and this new tax was applicable from the first day of the month following the month in which the law enters in force. The Constitutional Court was called to check the constitutionality of such a law and ruled that the Parliament must respect a buffer time of 6 months between the moment when the new rules are published in the official journal of the Romania and the moment when the tax is applicable. And in addition, the Constitutional Court ruled that a new tax can be effectively applied only from the 1st of January of the following year. These rules were already in our tax code, but now the Constitutional Court seems to give them constitutional value, which is very important because this ruling of the Constitutional Court has the potential to improve the stability of tax legislation. Of course, if this ruling will be followed by the Constitutional Court in the next cases. Also, the unpredictability of the tax legislation is generated not only through legislative amendments. Once a dispute with the tax authorities has arisen, the outcome of the dispute can be fully predicted. Just a short mention, under Romanian law, after a tax inspection, the tax authority issues a decision. And if the taxpayer does not agree with the decision of the tax authority, it may appeal the decision, of course, first to another superior tax authority, and then the taxpayer can go in courts to have a judicial appeal. From our experience in tax litigation, I have noticed it often happens that different tax authorities interpret and apply the same provision of the tax legislation in different ways. So what I want to point now is that the application and the interpretation of tax legislation is not always done in a predictable manner by the tax authority and also the courts. In fact, I think a tax inspection here in Romania is a tough challenge for any taxpayer. I've noticed 3 main complaints of the Romanian taxpayers regarding a tax inspection. So, the first would be the large amount of data requested by the tax authorities, and mainly because the authorities may check a previous period of 5 years. And also the taxpayer underlines that they have a short period available to respond to the request of the inspection team. And this issue is often doubled by a poor communication between the team of the taxpayer and the tax inspection team. And not least, another complaint of the Romanian taxpayers is that the ambiguities of the tax legislation, the so-called gray zone, are often interpreted and applied to the detriment of the taxpayer. And I think it's worth mentioning now that at the moment, a draft law is being debated in the Romanian parliament with the aim to expressly introduce in the tax code the rule in dubio contra fisco. I think this could be a way for the taxpayer to be better protected from the uncertainties of the tax law. But leaving aside this issue, I think overall the things are going in a good direction, at least from some reasons. From my experience, in the last 2 years, I have noticed that the Central Tax Authority has become more professional and the courts are more and more open to listen the point of view of the specialist. For example, in the last month, the Supreme Court decided in favor of the taxpayer to be cases that raised transfer pricing issue. To do so, the Supreme Court considered the OECD standards as these standards were explained to the judges by specialists. This is important because here in Romania are just a couple of finally closed cases regarding transfer prices. As well, given that the transfer pricing analysis is not a perfect science, is not arithmetic, the perspective of an expert is crucial in any dispute regarding transfer pricing. For example, in one of our cases related to the problem of transfer pricing, we requested and the court ordered for a judicial expert report to be drafted by a commission of 3 independent tax consultants. Therefore, I think the approach of the Romanian courts is to request advice from experts when very technical problems of taxation are raised. But let's be clear, the transfer pricing is just a little part of what tax litigation really means. Many tax disputes in Romania are related rather to the problem of the deductibility of expenses. Okay, so as a general rule, expenses are deductible only when they are incurred for the purpose of carrying out economic activity. That's a common rule, I think, for every jurisdiction. And but here in Romania, it sometimes happens that the tax authority do not understand very well how certain industries work. And I have an example that someone might find a little bit funny, but for the taxpayer, it not was so funny to get in a dispute against the tax authority. So a juice producer brought a certain amount of water to make juices, and after the tax inspection, the tax authorities decided that the cost of the water is deductible only to the extent of the quantity of juices produced. In other words, the inspection team decided that for a liter of juice, a liter of water is consumed. I think it's obvious that this argument is wrong because a large amount of water is lost in the production process. Of course, we went to the court and managed to prove by an expert report that the taxpayer is right. But that approach involved also some costs from the part of the taxpayers, like the cost of, for example, the cost of the expertise is administrated in front of the court, the lawyer fees, so on. In conclusion, in order to give a very short answer to your question, Andre, I think the main challenge for a foreign investor is the unpredictability of both tax legislation and the approach of the tax authorities. But also, I think there are some good signs that the things will be improved.
Thank you, Cosmin. So I guess to go for a little bit further, how can an investor mitigate the risks specific to a tax dispute?
How to mitigate the risk? Okay, so as Luciano already mentioned, I think there are many types of investments that can be made in Romania. For example, a capital investment, a real estate investment, starting a new business, or buying a part in an existing one. So, I think another examples might be identified. Depending on the investor's purpose, a double-sided analysis should be carried out from the beginning, from both legal and tax perspective. Because I think the applicable tax system might be influenced by the legal form of the investment. And the choice of a certain option can influence the applicable tax system and the final benefits that the investor will get. So the Romanian tax and legal system evolves, and from this point of view, it is important to plan ahead so as not to have problems later. Secondly, there are two important aspects in relation with the tax authorities, I think. The former is documentation, and the later is the communication process. So I observe that even large companies are sometimes superficial when it comes to document a transaction. And when the inspection team asks, why did you consider 5 years ago that this amount paid for this service is deductible? I observed that, in fact, a current employee has the ungrateful task to made deep research, in fact, being a true archaeologist, and he or she has to search documents such as contracts, deliverables, emails. So sometimes it's happened that these documents will never be find in a proper time. So what I want to point out is that it is important for the tax issues related to a transaction, or maybe a simple expense, to be clear not only today, but to be documented in such a way that things are clear even in 5, 6, 7 years. I think this part of the documentation is very important. For every taxpayer in order to avoid further problems with tax authority. And regarding the communication, the second thing that I mentioned as possible way in how the risk could be mitigated. I think the taxpayer has to support the inspection team with all necessary information, because many times what is obvious from the business perspective is not so obvious for the inspection team. That's why we as a lawyer recommend to our clients to contact a tax consultant when the inspection, when the tax inspection is going to, not so favorable approach from the tax authorities. And I think not least, the tax authorities should never be underestimated, because it is expected that in the coming years, their capacity to perform tax inspections to be improved. So the authorities, I think, will pay more attention to the natural person's income, and not only to go and inspect the companies. So it will be possible in the following years to see more attentive approach in a relay of the tax authorities in relation to the natural person's income, and that might trigger some issues.
Okay, great. And I guess as a quick follow-up on all of this, on average, what would you say is the duration of a tax dispute in Romania? And I guess what would be those costs for a taxpayer?
It depends a lot on the specific of each case. On a simple case, I think the duration of a trial will be in best case scenario 3 or 4 years. But when a problem, when you in a dispute that raised technical problems as transfer pricing, or in a dispute where an export report is required, the duration of the trial might increase maybe to 7-8 years. Regarding the costs, I think this issue depends on the particularities of the case, because there are not big tax fees, not tax court fees here in Romania. For example, in order to contest, to appeal a tax decision, a taxpayer has to pay $25, or I think this is the court fees. But if the taxpayer requested in front of the court an expert report to be drafted by a judicial expert, then the taxpayer has to support that cost, and this cost might be a little bit more. This process might be expensive from this perspective. Also, there is a lawyer's fee that is, of course, not it's hard to estimate without any details of a case.
Okay, great. Well, thank you. I'd like to thank both Lucian and Cosmin for giving us such a great breakdown of the Romanian taxation system. And I would like to transition now to our US panelists, and I'd like to invite Elizabeth and Mario to tell us more about the taxation requirements for a Romanian business that would like to enter into the US. For all of our attendees, there is a handout supplement that you should be able to click on and follow along as our US panelists complete their presentation. So I will let you guys take it away. Thank you.
Thank you, Andre. We really appreciated the Romanian system explained by Lucian and Cosmin. We're going to talk about some of the same types of principles, such as transfer pricing, We know there's a tremendous amount of software talent in Romania. That's one of the reasons why US companies are very interested in locating there. And we're going to talk about the US side, where some of these software developers may want to come to the US and market their products in the US. And Mario is going to go through a life cycle of from the simplest entry into the United States to more and more complex structures that a Romanian company may want to use when entering the United States. In our materials, we talk about a situation where two Romanians have developed a software app and want to market it in the United States. And we're just going to sort of use that as a jumping off point to talk about these principles. And of course, these principles will apply to any type of Romanian company that may be trying to locate in the US. Mario?
Sure. So in our example here, we basically have Maria and Florine Ballon, who have developed an app that uses artificial intelligence to set up virtual chess games called Checkmate. And they wish to market this app in the United States. They succeed in getting it into the Apple App Store and Google Play Store. And they wish to market it to schools in the US and hire a US consultant who lives in Massachusetts, because they love the wonderful weather, or he or she loves the wonderful weather up in Massachusetts. And as part of the promotion of the app, they send out 100 alabaster chess sets to sales reps to give to schools that agree to purchase the app. Okay, so let's kind of unpack this this seemingly simple hypothetical.
Exactly. And I know one of the things is the W-8 form is in order to get paid by a company in the US, a US company is going to demand a W-8 at a very minimum, and then, you know, it becomes complicated to try to apply treaty provisions and those kinds of things. You want to talk about that, Mario?
Yeah. I think that one of I guess at the very base case, right? When depending on how this, you know, this is a license, or because this, you know, apps present an interesting. Apps and anything IT present an interesting challenge for the U.S. because of our sourcing rules in the U.S. and there's specific rules around digital content. So, and so a lot of this is very much of a moving target, right, Liz, in the federal landscape as well as the state landscape. So I think one of the things, and I'll address your question. One of the main things is, well, what is the nature of this income, right? Is this a license? Is this a royalty, right, that's being paid as folks download this app, right?
Right. It's very different from regular business income.
Right. So I think that they would obviously provide Apple or whomever with this W-8 form. The W-8 form is basically a certificate of foreign status that would indicate that they are Romanian tax residents, right? And within that W-8, the difficult aspect of it is that these W-8s require you to provide kind of your basis under under an applicable treaty to reduce withholding. Okay, because with the way the U.S. works, if this is a license or a royalty of some sort, the U.S. will source the royalties to the United States if the technology is being used here. And the statutory rate is 30% withholding tax on the gross amount. Under the U.S.-Romanian treaty, that withholding tax can be withheld or reduced rather to 10 or 15%, likely 15%. I don't see this as a cultural item, although if we could make that creative argument, it would come down to 10%. The interesting thing, as was mentioned in the earlier panel, right, is that the U.S.-Romanian treaty is unusual from a treaty perspective. That's my editorial. That wasn't presented in the last panel, but it's unusual since the U.S. Has been renegotiating treaties throughout the 90s and into the early 2000s, right? There's been kind of an impasse in terms of new treaties, but what's unusual about the U.S.-Romanian treaty is that because of its age, right, it doesn't contain something called the limitation of benefits provision. Okay, most U.S. treaties contain a provision that acts as a backstop, if you will, that imposes additional requirements to be able to fully obtain benefits under the treaty for purposes of reducing withholding taxes out of the U.S. Out to Romania, as well as or to any country, as well as putting kind of bright line tests when an enterprise may be subject to U.S. taxation by virtue of having nexus or permanent establishment in the U.S. With that said, because the U.S. Romanian treaty doesn't have these provisions called limitation on benefits that add extra layers of complexity, the treaty is kind of easy to navigate. I don't know if you have any thoughts on that, Liz.
No, I agree with you. And it's interesting to see because there are some other countries in the EU that have, slightly different permutations of the treaty. And so, there can be some planning done around some of those concepts.
Right. So I think that as we kind of level set for everyone, there's a few ways to enter the U.S. Right? You can enter the U.S. at the simple level of being a customer or a vendor to sell from abroad, as may be the case here. You can begin to explore by seeking to align yourself with perhaps a sales rep that acts as an independent agent, as is also insinuated by our hypothetical. And from there, you can kind of start to organically grow. Do you need an entity? Can you establish a joint venture with this customer rep, right? Kind of have the customer rep put some skin in the game, if you will. Or does it make sense over time to possibly acquire a U.S. company or a U.S. startup that has some synergy? No, I think we're going to try to hit these points. Mm-hmm.
Yes. And would you want to do that in Massachusetts, Mario, despite your love of the weather and hockey?
No, I would not want to do it in Massachusetts. Only because Massachusetts, albeit has a rich history, right, and nice pubs and whatnot when the weather is much nicer. It's one of these states that while it has a wonderful infrastructure for companies like this with respect to technology because of the level of education there in terms of higher ed with MIT, the University of Massachusetts, Harvard, et cetera. It is a very high tax jurisdiction, and I don't know if you can speak to some of the draconian Massachusetts tax rules in terms of rates.
Exactly. One of the things is we have these alabaster chess sets that are there, and unfortunately, that's going to be considered an inventory, even though they're being given away. They're being given away in connection with the sale. And so it's going to be giving, the tax treaty is all well and good for, the federal level, but the states don't always recognize the tax treaties and will subject a company to tax. And having a physical inventory in the state is one of the things that will create nexus for that state. So we really don't want to do that. There are different techniques for working around those, but probably the best thing is to not go into Massachusetts in the first place and pick a friendlier state tax jurisdiction for that, Mario, right?
Right. And I think that's a great segue into kind of the complexity of the U.S. system that from as a launching point before you start to venture the market expansion from Romania, that there's a few items that I think we need to kind of level set with. The first one is that the U.S. we are a republic. We're a federal system, as well as with a state system. So you have basically federal tax laws, okay, at the very top of the cake, if you will. The U.S. tax system taxes foreign companies on U.S. source income only. Okay, it's not until you get into the U.S. formally and start to expand from the U.S. that you find yourself in a worldwide tax system. And the U.S. tax rate for foreign corporations is the same as for domestic corporations right now. It sits at 21%, right? The federal tax rate. We had a marginal system, and that was changed under the 2017 tax reform, or TCJA, as the acronym is. There is thought that under the new Biden administration that the tax rates will creep up somewhere to 25 to 28%. Okay, within that context, okay, you need to know that the U.S. does not impose a GST or a VAT or sales tax at a federal rate. That occurs at the state level. The states also impose, as we alluded to, they impose income taxes. Those income taxes range anywhere from what, Liz? We're from 3 to 5% up to 7%, right? They do not necessarily need to abide by U.S. tax treaties, although U.S. tax treaties are federal law. And a long time ago, before we had a constitution, we had something called the Articles of Confederation, if you remember, Liz. It's before your time and my time,
way
right?
back.
But they created a mess. They created a mess because you had states getting involved in foreign policy, and that was changed through our Constitution several years later, back in the 1800s, right? But I say that anecdote only to show that there is kind of a tension still, perhaps going historically way back there, to states have power to tax, and while treaties that the U.S. at a federal level enters into are federal law, from a tax treaty perspective, it's not as clear cut. So as Liz said, you may not be subject to federal tax, or you may not have a permanent establishment or tax nexus for federal purposes, but you sure may have one for state purposes. Okay.
Right, and this is something that domestic companies are struggling with too, because of this case called Wayfair, which was decided, there had been cases in the past that said, unless you actually physically enter into a state, there's no tax jurisdiction. And, back in the old days, Mario and I are old enough to remember you had catalogs that you ordered from instead of ordering everything on the internet. And when those companies shipped goods into that state, they didn't have to collect a sales tax. Well, now the concept of economic nexus has come along, and post Wayfair, every state in the country has some kind of economic nexus. Massachusetts in particular has a very draconian economic nexus based on cookies on the computers. Will give you nexus in Massachusetts. So, stay out of Massachusetts. Virginia tends to be a fairly good jurisdiction for companies that are particularly, software based. They've tried to encourage data centers and things like that. Each state has its own version of taxation of software, sometimes software as a service, sometimes software in terms of digital downloads, like a streaming platform like Netflix. So the tax laws are really all over the map, and you need somebody who's an expert in this area like Mario to help navigate those things when entering the US.
Or like you, to help you litigate you out of the mess.
Exactly. We don't like it. In fact, Maryland has just enacted a digital advertising tax that was designed to capture things like Facebook, but is so broad it's sweeping up everything. And there's already litigation about whether it is constitutional or not. So we constantly battle the tax authorities, both federal and state.
Right.
And Mario helps to plan around not having the dispute in the first place.
So with that, I think that as we move in terms of this description in terms of how the U.S. for their business venture, although it looks like they've already kind of commenced, right? First thing is that upon hiring this independent sales consultant, right, the most important thing would be that the consultant, at least initially, if possible, right, that the consultant not be a dependent agent, all right, because we're trying to basically control or mitigate Maria and Florian from having a U.S. permanent establishment or having any type of tax nexus in the U.S., whether real or apparent. So
Absolutely right.
right? So I think let we step back 3 bullets. I think if this was our client, Liz, I think that the recommendation I would make would be for them to set up their business, okay, in some type of corporate structure from a Romanian perspective. So we would need our Romanian colleagues to kind of weigh in on what type of entity would make sense, right?
Right.
And that kind of helped us also to ring fence not just tax risk to the extent we can, but also legal and contractual risk, right? So we want to kind of put that force field around them.
Absolutely, for protection purposes.
So the next step would be that as we deal contractually with Apple and Google, right? That contracts can be between the new Romanian entity and these U.S. customers, right? The independent sales consultant should be hired in an arm's length basis, right? It would be helpful if at the get-go, if he or she did not necessarily we didn't have exclusive control of this person, right? Because we don't want the Ballon checkmate company to necessarily have any U.S. payroll obligations, right? Which would come into place once we have a U.S. employee. So we'd want to make sure that person is an independent consultant, that he or she can basically freelance to whomever they want, but perhaps we have exclusivity as to the technology, that the person is helping us to promote in the U.S. Any questions on that?
That's right. It's very important because you wouldn't want to have to pay contributions, on that person's behalf to the federal government, the state government, and in some cases, local governments. If it's truly an independent person, you just pay what you've contracted to pay, and that's the end of it. No benefits.
Right. Now, from a reporting perspective, I'll put this one out to you. Would we need to 1099 this person or this person's company for some of these services?
Yeah, that's a very good question, because in the United States, if you pay someone $600 or more, you generally have to file a Form 1099 to report that payment. And it can be important from a statute of limitations perspective, because if that form is filed, there's generally a 3-year statute of limitations in terms of going back and reclassifying the person for payroll tax purposes.
And the 1099, right, Liz, is just basically an informational report that's filed with the IRS, but that by the payor, but it basically reports out how much gross income has been paid, right?
That's right. And, in some cases, it may be beneficial to hire this independent person through some kind of U.S. entity, because if we're not creating a permanent establishment, the Romanian company isn't going to have a U.S. tax identification number, isn't going to have a U.S. filing requirement. And, that presents some issues in terms of filing 1099s. On the other hand, we want the person to get a 1099 so that 10 years later, they don't claim that we owe them for Social Security contributions, or they don't go to try to file for unemployment tax in the state of Massachusetts, for instance.
Right. So it seems kind of innocent, right? Kind of easy peasy, as they say.
Right.
But now let's get into we've dealt with the independent contractor, right? Provided they're independent, the U.S. the Ballon company is not going to have to withhold on payments. We'd have to see if there's any Romanian at source of withholding, right, on these payments. But assuming that there are none, right? I think that the next side of it is, as part of the promotion of this app, what happens on these 100 alabaster chess sets that have been sent over to the sales rep to give to the different schools, right? I would wonder if this is all part of marketing, right? That the two things, right? Under the U.S.-Romanian treaty, the mere the mere possession of anything that would be kind of inventory or even marketing materials, right, for the purposes of expanding your market, should not create a permanent establishment, correct? Here in the
Agreed.
U.S., right? It's only when you start to come to the U.S. and you start to sign contracts here in the U.S. on a regular basis, and you start to kind of bind the company legally and commercially here in the U.S., and you start to generate for yourself income, okay, that could be considered effectively connected to necessarily to a fixed place of business, even under the treaty. For purposes of a permanent establishment, the treaty is not as dynamic, or it hasn't evolved with the digital age, right? So we're still looking for an actual office or place of business that is used on a continual kind of basis, right? To conduct business. Now that could be the independent agent's place of business or his or her home office or whatnot, which is even more important why we need to make sure that he or she truly is an independent sales rep that can work for other principals. Right, Liz?
You know, what if we just had a mailing address, Mario? What if we just wanted to put on our website that we had this US address, but it wasn't really an office, it was just a mail forwarding service?
You know, I think that's kind of innocent though, but I think as a protective measure, you have to take steps though to start to perhaps register the company in the United States in terms of obtaining a tax identification number and taking some prophylactic steps to protect yourself. And I think that brings us into the next way, kind of an overview of some U.S. issues that I think we need to touch on as we start to kind of get more involved here in the United States. Would you agree?
I agree, definitely.
So let's just, in the interest of time, kind of move a little bit forward and give all of you a broad brushstrokes what we're dealing with here. Okay, so say that the Ballin company has now set up an actual, you've got the Romanian company, you're starting to do business kind of more in the US of one form or the other, or perhaps your marketing efforts are starting to take an uptick in terms of the amount of activity. Okay, are you ready? Is Ballin ready to set up a U.S. company? You know, I think it would behoove us to advise Ballin to perhaps think of setting up a simple limited liability company, a single member entity. What does that mean? That would mean that the Ballin Romanian company would basically incorporate in a state of their choosing, right? It could be Delaware, it could be Virginia, Florida, Nevada, etc. A U.S. LLC. Okay.
Right, but I hear, Mario, that everybody wants to be in Delaware. I mean, shouldn't they just be in Delaware because everybody says they should be in Delaware?
You know, not necessarily. I think that, you know, Delaware has a long history of rich case law, right? That takes us back to colonial times, perhaps. And I think that Delaware provides lots of advantages if you're thinking of taking a company public, right?
Right, if they're going to do an IPO, you know, they should be in Delaware. But if they're still this smaller company, privately held, they're going to market to schools, things like that, Delaware might not be the best choice, right?
Right, and we could always redomicile, right? If at some point we were starting to raise capital, you could always redomicile. In Delaware, if you're incorporated in Delaware, is not necessarily going to mean that you're going to be paying high level of taxes in Delaware, right? Because of our federal system. And the way we have state levels of taxation, you're going to pay state taxes wherever you have nexus, right? And Wayfair kind of opens up the floodgates in terms of when you're caught in a state or not, right?
Right, exactly. But maybe should we put it in Florida because there's no state income tax in Florida?
You could, especially if you want to get away from those Romanian and Massachusetts winters. And the interesting thing about Florida is you're going to pay state income tax in Florida if you have nexus. I think somewhere to the tune of somewhere between, I think it's maybe 6% is the corporate tax rate in Florida.
That's right.
But
For
I think
individuals, there's no income tax, but that's
right,
not true in
zero.
terms of
Right.
a business entity. So that's another thing where sometimes the rumor mill is not accurate.
Right, exactly. The other thing is you're looking at state sales tax, right? And I'm not a multi-state expert, but Florida's sales tax is in the range of about 6 to 7%. So it's something to keep in mind,
Right.
right?
Okay, so we're unfolding with the new entity, LLC, disregarded in the United States, in a state where they're actually going to probably have some presence, right?
Right, right. So the next logical step would be, well, how is that entity taxed, right, Liz? Well, for our
Exactly.
purposes, from a U.S. perspective, an LLC can give us the best of all worlds from a U.S. perspective, in that the U.S. for U.S. tax purposes allows you to pick how you want the entity to be taxed, depending on its legal form. Okay.
So we call that check the box, right? You get to check the box and tell the taxing authority how you want to be taxed.
Yes, depending on what type of entity you have. So from a domestic perspective, an LLC with only one owner, which would be the case here to start, would be transparent, meaning the LLC would basically serve as a branch of the Balin Romanian company.
Right.
Okay, the Balin company could make the affirmative decision to basically check the box, as Liz is saying, on that entity, file the form with the IRS to treat it as a corporate entity. Okay, irrespective of which way you go, though, to the extent that the enterprise has U.S. taxable income from U.S. sources, you're looking at a 21% rate on net income from a U.S. federal
And
perspective.
Romania is cheaper, right? So it's better to try to keep as much money out of the not being sourced to the US if we can.
Yeah, you could. That comes into kind of transfer pricing and some of the discussions on the earlier panel, right? Which will apply here as well, potentially, right? But to the extent that the entity is not is simply marketing, right, and marketing aggressively, okay, it would make sense for us to have this single member LLC to basically help us in our marketing efforts and potentially to contain or ring fence legal really we're just ring fencing legal liability at this point, right? From a tax perspective, it will be Balin that'll be taxed, okay, on any U.S. source income. So to the extent we can minimize that, okay, that's going to complicate the structure a little bit more. Okay, and I think that brings us to a good segue in terms of bullet items that the audience should keep in mind. All right, ready, Liz? So
Ready.
the U.S. allows you to carry forward net operating losses. Okay, which is important for everyone to take note of. Okay, you can carry forward these net operating losses indefinitely. All right, similar to some other jurisdictions like the UK. Okay, this rule changed back in 2017. You can take your net operating losses to the extent of 80% of your taxable income. Okay, under current law. All right, but footnote time. From a COVID perspective, right? Something called the CARES Act was implemented in the US, similar to what happened in other jurisdictions as a result of the pandemic. So for tax years prior to 2021, okay, that 80% limitation was lifted, right, Liz?
So now it's 100%.
Yes, but I don't know if there's any extenders on those. Are there any extenders on those going into 2021, given vaccines and whatnot?
I don't think so, but as Cosmin was saying, we have tax uncertainty and there may be more legislation. Certainly there's going to be more legislation. So we have to stay tuned for that, right?
Right. Exactly. The other thing that the U.S. allows you to do, which may be interesting for a technology company, okay, that perhaps starts to ramp up business and whatnot, is to the extent that any fixed assets or capital assets are purchased as perhaps maybe business starts to expand into the U.S. As of 2017 going forward, the U.S. kind of modified its depreciation rules. So now you get there's like a supercharged bonus depreciation, and you're allowed to take the cost of certain investments in capital assets as a deduction in your first year if you meet certain criteria. I think that's important. The second item that I want to mention is that say that Ballin is looking to provide some operating capital, if you will, some seed money to the U.S. LLC. Okay, all right. Well, the U.S. has interest expense limitation rules. Those rules were modified in 2017, okay, such that you're allowed to take interest expense up to 30% of your adjustable taxable income in a particular year. You carry forward the balance into future years, okay. We have transfer pricing rules that are in effect, okay, and to the extent that we are allocated, that it's possible, as Liz was saying, to divert more profits on this business to Romania. It's going to be crucial that this is managed through transfer pricing rule to the U.S. and of course the Romanian transfer pricing rules. But taking note that as the operation gets a little bit larger, right, the IRS is going to have a keen interest in what's going on. Okay, and operating through branches at that point or a single member LLC may not be the best thing, because there's a lot of case law out there in terms of U.S. federal case law where the IRS has successfully attacked inbound operations that are conducted through branches where you're trying to basically base erode the U.S. The next item, or the next bullet that we should all kind of be mindful of, okay, is that the U.S.-Romanian treaty has a provision that allows for business profits to be taxed in the U.S. So in the U.S., when an inbound business invests and starts to do business through a branch, okay, which would be the case de facto with a single member LLC, right? The U.S. will impose a branch profits tax on branch profits that are deemed to be repatriated out of the U.S. This is in lieu of a dividend withholding tax. The branch profits tax statutorily sits at 30%. Okay, 30%. I believe that under the U.S.-Romanian treaty, that 30% can actually be reduced to 10%, right, Liz? If we qualify under the treaty.
Right. That's the advantage of the treaty.
Right. Other interesting items I think that we need to keep in mind here as we start to kind of evolve our business is, well, okay, guys, you just told us the best thing to do is to operate through an LLC that's considered a single member LLC, but now you're telling me that there's a little bit of risk. Well, as we start to generate potentially U.S. source income of some level, okay, I would advise that at that point, we maybe start to think of incorporating that LLC, turning that LLC into a closed corporate entity. Okay.
Right. Or
and perhaps
could you check the box, Mario, to do
yes,
that?
you could check the box at any time. Checking the box after you've been in operations for a few years would be kind of an inbound capitalization of a corporation, which I think should be tax-free, right, Liz?
Right. I mean, the other thing you could do is transform it into an actual corporation, and that's something you would do at the state level and is relatively straightforward as well.
Right. Either way, I think gets you to the same place, right?
Right.
Once we've incorporated that U.S. subsidiary, I think the next step would be to consider, well, what are our filing obligations, right? What are we talking about? How much income should we be leaving in that company, right? So I think that if all the IP sits, the intangibles, the profit drivers, if you will, that the Ballin company has developed sit in Romania, I don't think it would be a good idea to bring them to the United States, right? Because it's going to be much harder to get them out once they're here, right?
That's right. In fact, I'm wrestling with that problem now. And in that situation, they created a Delaware entity and made the foreign entity a subsidiary. And so it's become very difficult because trying to do a merger cross-border tax-free is difficult with that structure. And there's some questions. This is a German, not a Romanian company, but you have to be very, very careful how you set up the structure. That's why you need advisors.
Right. So I think that once we have evolved from the Balin company having a Balin Romanian, the Romanian company, and now you have an LLC in the U.S. that maybe we've converted to a corporation. I think the logical step would be to have that corporation effectively act as a marketing arm, right, Liz? Almost like a, if you will, like a limited risk distributor of sorts. So allow for a very small return to sit, a very small profit margin to sit in the U.S., right? This could be accomplished through compliant transfer pricing, right? The U.S. company at that point would file what's called a corporate tax return on a Form 1120, right? I would suggest that the Romanian company file, and it should have been filing all this time along, all up until this point of evolution, a protective return, something called an 1120F, which is a corporate return for a foreign corporation. Okay. And the reason why I would suggest this is because this allows the statute of limitations, the time within which the IRS can come in and inspect, to start to run, which is 3 years, as Liz mentioned. Okay.
Right. That's a very important consideration, Mario, and something a lot of folks don't do.
Right. And it's important because without lodging that return in the past, we aren't going to be able to preserve any deductions that we could take. In other words, if the U.S. came in and said, the Romanian company is actually the one pulling all the strings, right? There's actually profit here. You would be taxed at 21% on a gross basis without that protective return. It's that protective return that allows you to preserve the ability to take deductions currently and in the future, right?
Right.
So where are we now, Liz? So we've kind of evolved. We have a U.S. corporation, right? We have our little warehouse in Massachusetts, right? Because they couldn't get away from Harvard Square and the pubs and the coffee shops, right? And now we maybe have expanded, right? Because it's our Florida company, right, that is doing business in Massachusetts as well as in Florida, and who knows how many more states, right? So what you basically now have filing requirements in the different states in which you have nexus, right? You may have, you're going to have nexus from an income tax perspective, perhaps from a sales tax perspective, right?
Right. You're going to have to make allocations between the various states in terms of the income tax. It gets more and more complicated.
That's right. That's right. And it's important to note in this regard that while the federal system is based on on kind of taking what your bucket of income is, right, in the U.S. it's effectively connected, the states are going to apportion income and allocate income to the state, right? And that's based on an interesting multi-factor formula. I don't know if you have that formula on hand or easy at the top of your memory, Liz, but I know that it involves a payroll factor, it involves a property factor, right, and a gross receipts
and a sales factor. And each state has a little different flavor. Some double weight the sales, and so it can be complicated, and in some cases subject the company to double taxation.
Okay, Andre, you have a question?
He's telling us our time is almost up.
Oh, okay.
So he does have questions. He has questions for everyone, people in Romania and people in the US. And
okay, well, we can actually speed up. We can speed up and wrap up here quickly. And kind of let's marry. Why don't we do something, Liz? Why don't we marry our little structure here, our balance structure, and bring it in the context of kind of the first panel. Okay, so just to wrap this up, so say we've got great IP technicians, great technology in Romania, right? The Balin company is using Romania as a headquarters. It's developing this IP. We're licensing the IP or the rights to the different customers, right, through the App Store and the Google Play Store, etc. The U.S. subsidiary is serving as a marketing arm, right, going out to different school districts around the country, selling this, public schools, private schools. This is the best thing since
Chess is taking off.
yes, taking off. And now, right, we start to potentially use Romania as well, or the U.S. company starts to maybe decide, they have a meeting in Romania and said, well, why don't we get our margin a little bit better, right? Why don't we create an offshoring company, right? And put some synergy in here between the folks in Romania and maybe the folks in India or somewhere else, right? Well, this takes us to a neat sidestep, Andre, that I'll just mention a few things. So what does all this mean? Well, from a U.S. perspective, other things everyone needs to take note about is that the U.S. Passed back in 2017 something called the Base Erosion and Anti-Abuse Tax Rule, which is based on the BEPS provisions, right? In terms of not letting you necessarily to base erode from one jurisdiction to the other, right? So this applies to companies that foreign and U.S. that have gross receipts in excess of 500 million, and there's a 3-year average that goes into this. And you look at whether or not 3% of your payments coming out of the U.S., right, are potentially base erosion payments, right? There's a tax that's imposed. The next thing that's important to note is if the U.S. subsidiary starts to evolve organically or migrate from the U.S. to other jurisdictions, that's a no-no. Romania should grow organically into other jurisdictions, but not through the U.S. Why is that, Liz? Because we have anti-deferral rules, meaning the U.S. will tax the income of a foreign controlled corporation that's controlled by a U.S. parent. It'll tax it on a current basis. It'll tax it on a current basis under either the GILTI regime, which is a global intangible low tax income regime, and that has the effect of taxing that income at effectively a 10.5%, although the Biden administration wants to change the calculation method that gets you to the effective 10.5%. Perhaps that rate will go up to 21% or perhaps up to 28%. We don't know. The other important thing to note, okay, as I rush through this, is that there is an offshoring tax penalty provision that the Biden administration is thinking of. This would mean that if we have customer offshoring centers outside of the United States, IP developing centers outside of the U.S., if it's the U.S. parent, okay, you're looking perhaps at a surcharge of 10%, okay, potentially on the income or the margin that's being earned through that offshoring platform outside of the U.S. The U.S. is also kind of the carrot on the stick. There, the Biden administration, the platform has within it something called the Made in America tax credit, which would be good. It's a credit of 10% actually, Liz, which can be taken as an advance, and this is for U.S. and as well as inbound companies, meaning a company from Romania that wishes to revitalize a certain area in the U.S. that perhaps is in an economic downturn. This means retooling factories, retooling even warehouses, bringing education, re-educating workers and whatnot to bring them up in terms of into the technological race that we're all in. Okay, so that's an interesting kind of incentive that's being put out there called the Made in America incentive.
Right,
the other
and
thing
I think
go on.
you got to think about it with this Romanian company, as you said before, Mario, keeping some kind of ring fence so that as it grows and becomes bigger, we're not subject to some of these what are pretty evil sounding US tax acronyms, and
Yes.
then do some things from the Romanian side, perhaps in expansion, from the Romanian company rather than the US subsidiary.
That's
Would that
right.
be correct?
That's right. And I think the last two things I want to mention is we also have a proposal for a minimum tax on book income of companies that close their year with about 100 million or so of net income. That would be a minimum tax of about 15%. I don't know exactly how these calculations will run through because these are all proposals, right? That the Biden administration has put out there as part of its platform. The other interesting
Mario,
piece
I think we've got to leave some time for some questions
yes.
because we've only got about 3 minutes left. So Andre,
Okay. And
Yeah, thank you.
go on.
Thank you, Mario and Liz, so much for that wonderful discussion and explanation. And so now we will go into some questions for our panelists. I guess the first question we should address, Lucian, is for you. And the question is, what investment opportunities do you see in Romania from your experience with inbound US investors?
So I think also Liz mentioned a little in the beginning of their panel about the tremendous expansion that we have seen in Romania of the technology and software development sector. So if I'm looking at the macroeconomic numbers, I think currently this sector is expected to get to about 6% of the GDP in Romania in the next 2 years. And from this perspective, at least what I have seen on this direction, US and Romania, there are besides the really big multinational companies, if you look at Microsoft, Amazon, etc., that have been establishing here either a development center, customer service center, and things like this. We have seen a lot of small and medium-sized US companies and quite a lot of privately owned technology US companies that have come to Romania and have established some small centers for development, because they have found quite a lot of talent, and in this industry it's clear that the human resources is very important. So I think it's still, if you look at the tax incentive that we have for this area, and it's continuing to be applied, well, there are some discussions, should we still keep it or not, but currently it's still in force. This sector, the technology sector in Romania, is a very welcome one. We also have a lot of individuals that are freelancers, and I have seen that this type of individuals are also searched for by US companies for on a project basis. So this is an interesting point, and I think so this is the focus or the trend that I have seen specifically. Yeah.
And I noticed one of our audience members pointed out that the treaty, dates from 1974, well before the digital economy. And we also don't have the social insurance treaty. So I'm wondering if one of the things that really needs to happen is some updates, for this current environment that we're in, because, Romania is clearly a very, high technology economy.
Right.
And the US is also, a high technology economy, and perhaps there are some things we can do together to improve the tax climate and make it more adapted to this digital economy.
Right, I agree with you, Liz. I think just one point on that. The Romanian treaty is much like the Hungary treaty, right? In the sense that both were very dated. The Hungary treaty, I believe, was recently renegotiated, Andre and team, to bring it up to date. And I think that's, I don't know if it was ratified, because some treaties were ratified right before the election last summer. But I think that there are plans and there are negotiations taking place as we speak. And the one thing I will say is that the Biden administration, if you look at his foreign policy, he is very much of a multilateralist, right? Because of the time he has spent in government, right, over 52 years. So right about in terms of my age. So I think it's going to be interesting in terms of how the State Department and Treasury actually start reaching out to countries in more of a with a multilateral spirit. I think that's that's a positive light of things we should look forward to. At least that I hope as a tax person, an international business person, right? I'll leave it with that.
I think, Mario, I will build up short on your idea. The DTT is quite old, but at the same time, for example, Romania, even though it's not a member of the OECD, has already signed the OECD multilateral instrument, which should bring a welcome modernization on a multilateral basis of all the double tax treaties. Yeah, we are still waiting for the ratification of the MLI instrument, but it's clear that we are in that direction, even though we would not renegotiate the initial treaty.
And
Great.
we are waiting also for
you.
the United States to sign this treaty.
Well,
Right.
Right.
Which I would hold. I won't hold my breath on that one.
I'd hate to, I really hate cutting you guys off, but unfortunately we are all out of time. I want to thank you guys for such a incredible webinar. And I also want to tell all of our attendees today that this was the Romanian-American Chamber of Commerce's first tax webinar of a series that we're attempting to put together. So please be on the lookout for more webinars coming soon. You can find us both on LinkedIn and on Facebook as the Romanian-American Chamber of Commerce in Washington, D.C. And I will now pass it up to Clara for some ending remarks. Thank you so much. Have a great day.
Bye. Take care. Thank you, everyone.
Thanks, everyone.
Thank you.
Thank
Great.
you.
Thank you, everyone, for attending today's webinar, U.S. and Romanian Tax Considerations for Cross-Border Investments and the Mobile Workforce. And just as a reminder, we will be following up on any questions that were not answered, and you will be receiving a copy of the recording as well. We hope you enjoyed the presentation, and on behalf of us all, stay well.